Hey everybody, and welcome back to another video. This one will be on Tesla stock. We got into this on my first video on the channel, and I haven't talked about it since, and it has been pretty volatile in the time I've talked about it. If we look at the stock chart, we have some big dips and grooves, some high jumps, some big dips, and just about right where it started in the month. If we look at the 6 month, it's still up over $200 per share, which is looking good. And for the year to date, which is less than 6 months, we don't need to look at. And for the year, it is still up over 600%. So not too shabby if you have been in here for a little bit. If we look at the market capitalization, like I say in every video, more important than the stock price, it is almost even in terms of billions. It is at $635 billion. The PE ratio is sky high. I think they're using trailing PE, not forward-looking PE, which I do not blame them, because forward PE is a little bit what would you say? Give me a minute. It's a little bit subjective. My bad there. Rather than objective, because trailing P is always objective. It is what they have done. Forward P is looking out towards the future and what their earnings will be in future years. So you can't really predict the future, so you can't predict forward P completely accurate. But if we're looking for the forward P for about a year, it would definitely be less than half of this, because regular Ps are in the 20 range for the rest of the S&P 500 currently. Now, what I really wanted to get into this video was Ark's new price target. If we look here, this came out March 19th. I'm a bit late on this. I wanted to do it earlier, but I didn't quite have time. I was making other videos on other stocks, so I'll do it now. This was released by Tasha Keeney. If you want to research her, I did myself, just because I didn't really recognize the name, and I thought it might come out. I don't know why I thought it might come out directly from Cathie Wood, but obviously she has approved this and had some details going into it because she works for Ark Invest, and she wouldn't let her release it without it. But if you look her up, her LinkedIn is huge. She has a very good background in investing and finance. So we have no reason to believe that she is incompetent at her job. So what she starts with is last year, Ark estimated that in 2024, Tesla's share price would hit 7,000 or 1,400 for its split-adjusted 5-to-1 stock split. Based on our research, we now estimate that could approach 3,000 in 2025. Their number could double within a year. And they will tell you why in this article. So, to arrive at this forecast, Ark used Monte Carlo model with 34 inputs. The high, the low forecast incorporating 40,000 possible simulations. It's kind of like Doctor Strange, if you ever seen any of the Avengers movie or the Doctor Strange movie. They're kind of looking into thousands upon thousands of outcomes and picking the most plausible one. Our bull and bear case price targets are the top and bottom quartile outcomes from the simulations as shown above. Expected value will be $3,000. This projection is our base case for Tesla stock in our 2025 based on Monte Carlo analysis. Bear case $1,500 and bull case $4,000, so even higher than the expected value. And if we look here, these are some of the inputs that they put in. Now, I'm going to get into some problems that I have with this and why their price target could be a little too conservative, in my opinion, just based off what numbers they are using and how they are extrapolating it. So these numbers, in my opinion, appear quite arbitrary because they don't really give much reference or detail where they're coming from. They just kind of pull them out of thin air. Now, the first is the cars sold. They don't give you any details on how much of each car will be sold. They just say, oh, 2025 they're going to be selling 10 million cars, and you just got to believe it, which is, to put it lightly, a huge increase from 2020. Just in 4 years, it's already 2020 now, they're expected in this year to release 1 million cars. So they would have to double and double again to get to the 10, which is pretty hard to do, especially scaling and supply with the chip shortage currently. Now, I know that is a short-term issue, but it could turn into a long-term issue if they do not get the chips sorted out correctly. So what I would have liked here was a list of how much of each car is sold. So I know that they might be expecting a Model 2 in there, which I would have liked to know if they are expecting new cars to be released. They are obviously including Cybertruck numbers in there, and I am not sure if they are including the semi numbers in there, which would be very interesting because I think that could be an extremely lucrative market, maybe even more so than the consumer cars. So there's my first problem. The average selling price, I'm not sure if this is including the autopilot or anything, but $50,000 you would think would be pretty similar to what they would be in their bull case, but they actually expect the price of their vehicles to go down much quickly. So I guess that implies that they're going to release a Model 2 to lower the cost basis, or that people will not be buying the full autonomy and that it will be a month-to-month subscription-based service, so it won't be included in the cost of the car. I'm not quite sure, but they just don't really give much clarity on a lot of these numbers. So their electric vehicle revenue is $26 billion in 2020. They expect that to almost 10x, which is about even or slightly less than about half of their cars sold. So they expect their revenue and their margin to decline slightly as they build cheaper and cheaper cars, is what I'm getting from those numbers. Which you would think as the company is improving and expanding, they would be able to increase margin, which you would want in most companies, which might be a red flag. Insurance revenue, not disclosed currently, but this is another problem. Why in their bear case did they have $23 billion, but in their bull case, $6 billion? I think in your bull case, you should have the most bullish numbers. Now, they might have their reasons for doing this, but I just personally, from a standpoint of projections, don't agree with that. A bull case should be a bull case, and a bear case should be a bear case. Now, they just kind of mixed up a lot of the bull and bear numbers, and I think the bear case is honestly a little too, I think the expected value case is a little too high. I think it should be much closer to the bear case, and I think the bear case should use slightly more bearish numbers, in my opinion. So we look here, another one, and the human-driven ride-hail revenue. This just doesn't make any sense to me. So in 2020, obviously zero. They do not have an Uber service. But in 2025, in their bear case, they expect them to have $42 billion in revenue, which is huge. Huge. But in their bull case, they expect every single person who's going to buy a Tesla to have the autonomous ride-hailing network so that they can have the robotaxi, which I just don't think is feasible. I don't think everyone will be able to afford that. I think that people might not even want it. I just don't think that you can predict that no one will have this service. Now, they might be predicting that they never come out with it in this bull case, but that is not the case. They have pie graphs that we'll get into later that give out the revenue, and there's just too many inconsistencies like that where I don't really understand quite where they're coming from. So now, obviously, the autonomous ride-hail network is huge in the bull case at $327 billion, half of their current market capitalization. But I don't agree with the zero here again. I think that not everyone who's going to be having a Tesla and wanting to make money from it is going to want to use the autonomous. You're still getting a great deal if you Uber with Tesla, because let's face it, electric is much cheaper than gas, probably 10x at least. So if you Uber with Tesla, even if you're driving, you will make a lot of money. And I know some people have very nice cars, maybe they don't trust other people in them, they don't want to get it dirty, they have special rules. I just don't think that everyone would feel comfortable doing that. If we look at the electric vehicle gross margin, it is, again, lower in the bull case than the bear case. By 15%. That's quite a bit. Now they have margins increasing from the current year at 21%, but that's only 4%. I don't know how their bear case is increasing margins other than their insurance and their human-driven ride-hailing, because it just doesn't really make sense to me. Now, if they would apply all of these super positive numbers in the bear case to the bull case, the bull case could get up to 6,000. And I'm not kidding at 6,000. Their bull case could legitimately be 6,000 if they used all of their bullish numbers. If we look here, the market capitalization will be $4 billion in their bull case, $1.5 trillion in their bear case, $4 trillion in their bull case, $1.5 trillion in their bear case, and then their current market capitalization is $673 billion, or it was when they posted it. Currently, it is $635. So it's gone down. The share price, when they posted it, was $700. They think it will over double in the bear case in 4 years, which is still not a bad return, especially if you've already been invested in this and you don't want to sell for tax reasons. And it will over 5x in 4 years in the bull case, or it will 4x in the expected value. Another one, the free cash flow yield, the 5 should be in the bull case. You guys know the deal. If it's a bull number, these numbers would be much higher. And I don't know if they didn't want their numbers to be that high to throw people off, like they did when they released their numbers a couple years ago, saying that it would reach 7,000 by the year of 2024, which they're probably more than right at, because it reached almost 1,000 just in 2020. Some key assumptions that they are using under Wright's law. Again, the bear case, the margin is above the bull, which is in limbo world. The capital efficiency will go down. Again, makes no sense in the bull case. The maximum annual production, which this one actually makes sense. It goes up in the bull case. Percent of all Teslas on autonomous platform, 0 in the bear case, just because they are predicting that they might never get there. But again, in their pie charts, that doesn't really represent it, so it doesn't really make any sense. And in the bull case, 60%, and then 40% will be humans. And in the bear case, the percent of cars sold into human-driven ride-hail will be 40%. So I guess no ride-hailing would be 60% in the bear case. Key updates, they pushed the price target 1 year forward. They refined the capital efficiency. They added insurance to the model. They added human-driven ride service and the probability of full autonomy. One problem here, they didn't include anything about the energy, which energy is growing over 100% year over year, which I don't really think is something that is too intelligent to not increase or include something that is increasing at such a rapid rate when it's growing over 100%. And they just got a new update that there could be different colored solar panels. So if you want a solar panel, it doesn't have to be black anymore. You could get it customized where it's red, and so forth. And that could be much more appealing because it would look much more like a metal roof, which are very in right now and kind of replacing the shingles. Electric vehicles, this kind of goes into some more numbers if you want to read it. That the insurance, human-driven ride hail, full autonomy. Here's another problem. This could easily have been a bell chart and been much, much easier to read if they would have put the price down here and the likelihood up here. And the price would have gone from 2,000, basically, oh yeah, it's probably never going to be that. It would go up because the likelihood would go up. It'd be like almost 50% up to 100%. It'd be around like in a double or the expected value, and then it would go back down, and it would just be much more easier to read because most people know how to read bell graphs, and this one, it's just not very accurate in my opinion. When you look at this chart, you can say, oh, there's a 0.0000% chance that it could get to 23,000. I just personally think that it's leading people on and may get people too bullish. And again, it goes below 0 for some reason. There's I don't know. But 2,000's down here, so it could be lower than where it's at, but I just don't like the chart. And another one here, you could have made 4 different bell graphs from this. Anytime you have probability, you can make it into a bell graph. All you have to do is flip the axes. And all they're saying here is kind of the 4 different scenarios they used in the 40,000 scenarios to project their price target. So the gray, Tesla doesn't exceed 4 million and does not meaningfully sell into vertically integrated ride-hailing or robotaxis. Tesla produces more than 4 million but does not meaningfully sell vertically integrated ride-hail. Black is they incorporated vertically integrated ride-hail but not deliver on robotaxi, and the blue is they do deliver on robotaxi. So what I can see here is there is the likelihood here, which 50% is a good likelihood, and both sides are 0. So if it gets up to 100%, there's least likely a 0% chance of it happening. It just would have been much easier to read if it were a bell graph. And here are some pie charts, which do not agree with the numbers that they had. So these are their estimates. This looks like the expected value. This is expected value for EBITDA, and then expected value for the $3 trillion market cap. And the $3 trillion market cap, which would be the bull case, says that there wouldn't be any human-driven ride-hailing, and this one does. So it's, again, just another inconsistency. Conclusion, given the updates outlined in this blog, Ark's 2025 price target for Tesla is $3,000. The bear and bull case suggest that Tesla could be worth roughly $1,000 and $4,000 per share, respectively. And then they just gave you some more notes. Now, realistically, could this go to 6,000? We will take a look from the market capitalization perspective. I don't think so. 6,000 would be a little too rich. I think 4,000, like I said, kind of is like the full bear case, but I just wish that they would have used a cleaner way to get there. I wish they would have used some more conservative numbers in their bull case, but for switched around some of the bear case numbers that are more bullish than bull case, and that they could have had a more consistent kind of analysis of the stock. So if we look here, to get to 4,000 would be about a 6x in stock price. So if we 6x the market capitalization, it would be 3.6 billion, which would be the biggest company in the world today by far, considering Apple. I think it just fell under 2 trillion again, so it's about $2 trillion. So it'd be almost 2 trillion more than Apple. And trillion, when you're talking trillions of dollars, that is a huge amount. So the question of this video would be, do you think that Tesla will be the biggest company in the world or on the stock market in 4 years? If you do, buy in. Simple as that. Then you kind of agree with what Ark Invest is saying and what their targets are going for. And if you don't think that they can reach that and get to a multi-trillion-dollar market capitalization, then I would probably not invest and maybe sell if you have invested and made some good profits. This is how to invest. Thank you for watching, and please come again.